What's up, everyone? It is Road to Retire, and man, after doing the Bills to Billion episode yesterday, I'm just so excited to finally invest back into dividends, get those coming back in, get them flowing. I took a long time to think about what I wanted to invest in. As you can see on the screen, it's only 2 holdings, so let's get into my rationale. So initially, when I started this whole challenge, I was pretty convinced, at least I convinced myself, to just go all in 100% on JEPI, JEPI, which is JP Morgan's Equity Premium Income ETF. JEPI overall, they invest in around 120 holdings, and a couple of those holdings are ETN, Equity Linked Notes, ELN? ETN, ELN? I already screwed that up. Anyway, these equity notes are essentially just derivative instruments where you're supposed to preserve capital and then you can get upside based on how the underlying equities do. And if you're not familiar with that, don't feel ashamed because equity notes can get pretty confusing, but it's not a huge portion of what JEPI holds. It is a bit of it, but JEPI does hold a lot of high quality dividend stocks, over 100 individual holdings like I stated. So there is plenty of diversification at that, but I feel like I needed more diversification. So I did want the monthly dividends to make it a little bit easier to track and project, and when I'm getting payments from this portfolio in the future, it's like I want it simplified. But I ended up throwing VYMI in there, and it takes up a good chunk of it. 30% of the portfolio is going to VYMI, which is Vanguard's International High Dividend Yield Fund. So this one, if you want to talk about diversification, this one has, I believe, over 1,300 holdings. And the reason I wanted it is for that international exposure. So all 1,300, or I think all 1,300 are overseas. They're not US-based companies. They are not individually traded stocks in U.S. stock exchanges, and if they are, they're ADRs. So complete international exposure. They might sell products and stuff in the United States, but nonetheless headquartered globally. And I think this is a good portfolio balance to have. So it's only 2 holdings, and it's still very aggressive. Do not get me wrong. This is not a conservative portfolio by any means. However, given how aggressive I wanted to go and given how high yield I wanted to go, I think this is a pretty good mix. I'm getting a ton of diversification just in 2 holdings. I'm getting high quality stocks out of the United States holding JEPI. And JEPI, they claim that they can capsize some of the downside risk, cap some of the downside risk using the equity linked notes. We'll see how it does long term. JEPI is such a relatively new holding that, yes, it hasn't even been around pre-COVID and during that drop. We have yet to see how it will really hold up in a long horizon. But I love JEPI. I love what it stands for. I believe in this thing, and it's a Moneyball quote, by the way. But I think JEPI is going to be good long term, and it's one of the most highly allocated ETFs on the market right now. JEPI has exploded in consumer purchases. So the public also has a very high opinion of JEPI. And I've seen a lot of the community talking about this one. And it seems like you either love it or you hate it. You say it's overhyped and you don't get it and you don't like it at all. And then like the comparison compared to like the S&P 500 benchmark is low, or you're in my camp where it's like JEPI is awesome. I love what they're doing with this fund. You're getting a ton of diversification while still getting that high yield, and it pays monthly, which is huge. I'm in that boat, and I'm including VYMI just so I can get a lot of diversification, international exposure. VYMI still averages around a 4% yield, so it's not low yield. It's not a low yield paying fund. It pays quarterly, which, I was hesitant on doing at first. However, it's fine. I think it's worth it for the diversification. The yield is 4+. So when you factor in JEPI's yield, which right now is ridiculous at like 10+, even the portfolio managers at JEPI think that roughly 6 to 9% is more realistic for JEPI in a normal environment. JEPI's just doing so well now because the market was tanking there for a little bit. And, since they have covered calls and whatnot, it holds up a little bit better and you can get a higher yield in down times. But when the rates start decreasing by Jerome Powell, he starts saying that we need to cut rates and whatnot in the market, the equities start going up in value. The yields won't be as high as JEPI, but I think the price performance will be just fine. So I'm getting a lot of diversification, just holding 2 holdings. What's up here in the corner here? Minimum $3.50 per total purchase. Why do I have this? I'm going to be doing my portfolio of 2 holdings in Robinhood. And the glory about Robinhood is that you can invest a minimum of $1 into an individual stock. So in order for me to get $1 worth, I'm going to put at least $3.50. I can do a little bit less. It's like $3.40 or something. But just to make it easy, $3.50 minimum every time I buy these 2 in Robinhood, so I can get a minimum of $1 into VYMI with that 30% allocation. So I am so excited to invest again into dividend stocks. I can't wait to get that income flowing. I will be using the payments right away. So I'm hoping to get this puppy up as quick as possible and build it up as much as possible so I can just start, incorporating some of that income into my life. Hope you enjoyed the video. I can't wait for the Bills to Billion challenge to flip to the dividend side. I do the Bills to Billion every Sunday. If you're not aware, you can look at old videos. If you're just watching this channel for the first time, thank you. Subscribe if you want to see my journey, and I'll see everyone in the next video.